So, is there going to be a crash in the real estate market here in Atlanta, or are we going to go back to business as usual pre-COVID? My name is Ryan Ward, and I am the broker here at Premier Atlanta Real Estate, and I've put together some custom statistics along with some charts from the First Multiple Listing Service and the Federal Reserve to help see if we can't figure out what the real estate market is going to look like going forward. Before we get started with the local data, the first thing that I'd like to talk about is recessions and whether or not we should expect to see prices drop in the housing market based on a recession. So most of us think that at this particular time we've been in a recession since the beginning of 2022. Based on negative GDP. But if I look at this chart here from the Federal Reserve, you'll see that it goes back to, before 1965. The gray vertical bars here represent all of the recessions since then, and the blue line represents housing prices. And if you look at what's happened during and around each of those gray vertical lines, it's hard to draw the conclusion that prices fall based upon us being in or not being in a recession. Sure, you could look at the price fall in 2008, but if you actually look at what happened there, you'll see that prices fell, and that preceded the recession. And most of us know by now that it was the housing market and the financial crisis that caused that recession. So looking at that chart, there's nothing to indicate that the fact that we are in or maybe in a recession has any correlation and anything really to do with housing prices falling because of it. And so the next chart that I want to show you is something that I pulled from the First Multiple Listing Service. And this is basically just looking at the month supply of homes in the First Multiple Listing Service going back to 2012. And basically, anything under a 6-month supply of home is what we would consider in the industry to be a seller's real estate market. So it's been a seller's real estate market technically since, I don't know, let's call it 2013. And if you follow this chart all the way out and look at where supply is right now, you'll see that we are roughly at about a 2-month supply of homes right now. Far cry from a crash, far cry from a balanced market, and it is a far cry from anything other than a strong seller's market still. Now, we do expect that to continue to change, but that would be what we would expect every year at this time of the year as summer comes to an end. The next chart that I'd like to show here is what happens when we look at the showings per listing. Now this goes back to 2016, and you can see that there's been just an incredible amount of additional demand from the end of 2020, the beginning of 2021 that outpaced everything prior to it. And so sure, it feels like all of a sudden no more houses are being looked at. But if you look at the historic numbers here, it's easy to see that we're leaving an extraordinary time. We're not entering an abnormal time. We're actually just going back to the way things were pre-COVID. And most of us in the real estate market think of that as a pretty good thing because it's been a terrible market for buyers over the past couple of years. Hundreds of thousands over list price on a lot of listings. And that's just not good for anybody. So the next chart that I have here that I'd like to show is the luxury housing market. A lot of times people think that what happens in the luxury market is what's coming to a market near you in the regular real estate market. So if we look at the supply of what happened or what's happening in the luxury market, you'll see that really it's still abnormally low as well. It's been dropping since 2013, and it's been a great market for the luxury market since then as well. Again, nothing here to indicate that there is a pending crash or upcoming doom. Maybe a correction might come because of the mania that took place here at the beginning of 2022. Outside of that, we don't see anything in those markets to indicate that we're going to see prices fall. So the next chart that I have here put together is this is a chart that I put together starting in April when the market started to change, and it looks at the inventory levels of all the cities kind of in the North Atlanta market: Alpharetta, Cumming, East Cobb, Milton, Roswell, and Sandy Springs. And you can see that inventory did rise for a while, but it has pretty much leveled off. So if I take those individual charts and I combine them into one graph, you'll see that inventories have leveled off, and they've stayed leveled off for about the last 3 weeks now. So this is what we would expect to see at the end of summer, and it's in fact what's happening. So again, another chart that doesn't indicate anything like an abnormal real estate market, a crash, a correction. There's nothing to indicate anything like that is on the horizon. So that is the combined active chart. And then if we look at the pending chart, which shows the demand in the real estate market, you can see that going back from April to August here, there's been a slight drop in demand, but there's supposed to be a slight drop in demand this time of year. So nothing out of the ordinary taking place on the pending demand home sales front. So one more chart that indicates that we're just going back to a normal real estate market and there's nothing weird happening here. All right, so the next chart is what we've seen with price reductions. Now, one thing to keep in mind here with price reductions is that sellers are the last segment of the housing of people to enter the real estate market. Buyers enter first, then comes real estate agents representing the buyers, and then come sellers who kind of stumble in at the end when they decide to sell their house and they've heard about other people selling their house for tons of money, and so they expect that they're going to get more than the last sale. And so people come on the market and they overprice their homes when prices stop going up by 20% annually. And so what we've seen now is we've seen people have to reduce their unusually, abnormally, incorrectly priced homes that were just priced too high to begin with. And so you've seen a lot more reduced listings, and that is to be expected. But the good thing here to keep in mind is I think that when you go back to this pending chart, once people reduce their prices, you'll see that people continue buying them. So between these two charts right here, I don't see anything that indicates anything crazy right now. So the next thing I want to look at are two specific cities. I'm going to look at Alpharetta and Sandy Springs. These are two popular cities on the north side of Atlanta, and we're going to look at them independently of some of the larger, so we get a little bit more hyper-local here to see if there's any trends that buck what I'm showing for the overall metro Atlanta market. And so you can see that active listings in Alpharetta actually have dropped recently. You cannot have a market crash. Let me repeat that. You cannot have a market crash with inventory dropping. It would be as close to impossible as I can think of. So that right there is a strong sign that the housing market is actually very, very healthy and nothing to worry about if you're a buyer in this market. And if you want to sell your home, it's obviously still a great time to sell. So that's the active listings in Alpharetta. Next, let's look at the reduced prices. You can see that the reduced prices absolutely are going up as they needed to, because people overpriced their homes over the summer expecting the same thing that has been happening for the past 2 years to continue. And that's just not a realistic thing to continue. That just couldn't continue any longer than it did. So again, with the pending sales, look, we see an uptick in the pending sales. People reduced their prices. And because they reduced their prices, people started buying the houses again. Another thing that shows that there's nothing like a crash on the horizon based on any of these market statistics. Something that I do like to track also is the ratio of pending listings to active listings. And if you look at this one here, you'll see that the number of pending to active is actually rising again in Alpharetta. And that's another sign that the housing market is bouncing off at what is kind of pre-COVID levels. And this is what we would have hoped to have seen with the correction in the real estate market. And it does appear, at least at this time, that that's exactly what is happening. So if we leave Alpharetta, arguably the most sought after market in metro Atlanta, so we move over to Sandy Springs, where prices tend to be just a little bit higher, to see if things change there. If we look at the active listings in Sandy Springs, they've also leveled off. Because they've leveled off, it just goes, just one more data point to show that the real estate market isn't doing anything crazy. At the end of summer, inventory is supposed to go down. If we were going to be going into a correction, especially if we were going to be going into a crash, there's no way that you'd see a leveling off and a drop of inventory in any way, shape, or form. You would have to have inventory to continue to rise, along with a lowering of demand. And if you see that the number of active listings is falling in Sandy Springs, and then look at the number of pending sales, you're seeing an uptick as the prices get corrected with these houses as well. So again, another thing to indicate that there's no crash coming, possibly a correction from the mania at the beginning of the year. Otherwise, an overall very healthy real estate market. The last thing that I'd like to show is the number of pending to active ratios here in Sandy Springs again. And here, just like in Alpharetta, you'll see that there definitely was a trend line down as we needed to see. But now that we've gotten to a place where pricing has gotten back in line with the demand, you're seeing the number of pendings to actives go up again. And so that's a whole lot of charts to look at with a whole lot of data, none of which indicates a correction, and especially none of which indicates that there's anything close to a market crash happening in Metro Atlanta. So I'm not saying that there can't be a crash. I am saying that the data that we have on the real estate market, be it leading or lagging indicators, all indicate a normalization of the real estate market, not even a correction where we would see prices drop by up to 10% in a given year, although I'm not ruling that out completely. And there certainly is absolutely zero data to suggest that there's a crash coming in the real estate market from any of the numbers. Could there be some outside influences that take these numbers and skew them back in a negative direction where we start to see prices fall? Sure. There's nothing on the horizon that isn't already built in. We've seen interest rates drop in the last month, and they are now expected to kind of stay lower than where we kind of worried they may go as the year plays out the rest of the way. So there's nothing here in the Metro Atlanta real estate market to indicate a crash. As always, thanks for watching. If you have any questions, drop them in the comments section below, send me a message or contact me offline, and I'll be happy to show you how I made these charts, how you can use these charts, and how you can help make sure that the consumers that you're working with stay informed, and how you can be the expert to make sure that they know and have a trusted person they can go to for all of their real estate needs. Thanks for watching.